welcome on board our market guest for the evening. And joining on the show today, we've got Rahul Bhasin, Managing Partner of Bearing Private Equity India. He joins in live here on the show. And of course, Mr. Bhasin, good evening. Thank you so much for taking time out for us. You know, we decided to invite you on the show today because you have over 2 decades of investing experience behind you, both as a fund manager and a private equity investor. So we thought it would be interesting to, you get your take on things. Let's first understand how you're analyzing the entire investing landscape right now in India, because, one big grouse that a lot of market participants have is that earnings haven't quite improved, but valuations seem to be skyrocketing.
So if you look at it, the last 2 years, in fact, there's been virtually zero EPS growth. And if you break that down into its components, you'll find that essentially the entire commodity sector has had negative growth, and the rest of it is, things like the consumer pack and the private sector banks, etc., have had some amount of positive growth, and on average, it's kind of neutralized each other. But that's over the last 2 years, you've had no growth, in spite of the fact that you've had some run up in the market. But you have to look at this in the global context. In the US, if you look at the net earnings of all US corporations, from 2011 till now, there's been no growth, but their capital markets are up 85%. Very similar kind of stories are there across the world. From an Indian perspective, if you look at it from a dollar investor's perspective, the markets today are still below where they were in 2008, even though the size of the GDP has almost doubled in this period of time. So if you look at whether as a proportion of GDP, etc., it's lower. Now, if you decomponentize that, what you will find is that most of the Indian businesses, the asset turns in 2008, which was close to 4.3, shrunk to 2.3, they're at roughly 2.8, 2.9 now, and therefore as a consequence, they are below their mean cyclical profitability too. And therefore, even though on the face of it, the multiples look pretty expensive, on a cyclically adjusted earnings, and you will find that the multiples are maybe not that expensive, and the Indian market is quite a decent place to invest in.
Rahul, do you see the government accelerating the reform drive, at a very speedy execution manner? Do you think that will be critical for the market? Because there seemed to be a lot of enthusiasm about, Mr. Modi actually going forward with the reforms after the UP election, the way it swung. And probably that is also driving this big rally last couple of days.
Look, if you ask me, there are two things. I mean, if I look at the policy level from the center, reforms, I would say that they're 80% there. I think the real issues and challenges is that the bureaucratic framework which was set up in India, and as was envisaged at the time of independence and when the constitution was being written, I think was appropriate at that juncture. And I think that bureaucracy reform so that execution becomes more efficient with today's technologies in today's sort of ecosystem, I think that would be, to my mind, the most important reform step that needs to get taken. And I don't think that that's going to be easy, but that's very, very critical to get us into the next phase. I also believe that a lot of retraining of personnel within the government and every apparatus of the government, whether it's the judiciary, whether it's the bureaucracy, whether it's specialized arms of the bureaucracy, is necessary, because a lot of times you see policy interventions, etc., simply because the world has moved, but there just hasn't been that kind of training or that kind of keeping up with the times as a phenomenon. And I think that a lot of that is due to how these organizations are structured. They need reform. Also, one of the biggest places where reform is needed is in factor markets, and those are all state subjects. So you will need tremendous amount of reforms in the states, because you need both the center and the state to drive the reform process, to make it all come together and work. You can see some states have already taken the lead on some of these things.
Rahul, foreign investors have shied away from Indian markets for last couple of months, only to return the last 1 month. But otherwise too, the liquidity has been quite ample from the DI side last 6-7 months almost. Do you see foreigners too would start increasing their allocation to India going forward as earnings trajectory improves and as much more visibility comes for reforms?
So I think you will see two kinds of phenomenon. I think on a structural basis, yes, you will continue to see flows. I mean, India is structurally one of the fastest growth markets in the world. I also believe that we are at $1,800 per capita income GDP. Every country in the world, when it hits this kind of per capita income, tends to have an inflection point and start growing significantly faster. All the Asian countries virtually double their growth rates at this kind of per capita level and grew that much by 10-15 years at a stretch after that. The Latin American countries' growth rates inflected at this kind of per capita income and grew maybe 50% faster. So you will see that similar phenomenon happening in India too. I think one of the things that you have to live with is the fact that you will get volatility, because with rates inevitably going up in the US, I think that levered position holders might get shaken out from time to time, and that will cause some degree of volatility in flows. But if I were to look at the cumulative flows over the next 3 years, I think India will receive a lot of flows.
What about worries, from the states as far as protectionism goes? Because so much has been spoken about as far as Donald Trump's stance is on countries like India. Of course, so far there's very little known. So in that sense, we're really sort of shooting in the dark. But what do you think could be the possible impact on emerging markets like India, or even sectors like pharma and IT, that do business in the US?
I think if you look at his policy pronouncements on the pharma side, that's the easier one, let me deal with that first. You will notice that their biggest challenge is to try and control healthcare as a percentage of their GDP, and Trump seems to be in favor of lower cost solutions, and India has the lowest cost manufacturing pharmaceutical industry in the world, and actually our US FDA compliance record is actually quite good. I know that every second day and every third day we have our headlines screaming that such and such plant has got these 483s and got various warnings. But the reality is that plants all over the world get those. That's not unique to India. And overall, as an Indian system, I think India still has more approved US FDA plants than any other place in the world. So I think it's going to be a core part of any supply chain today, simply from the competitive dynamic that we have. As far as IT is concerned, I think the biggest challenge to IT is the artificial intelligence, productivity gains, etc., which are transforming in a lot of ways in which IT is being consumed, which is transforming the nature of engagement and work. And I think, to my mind, that's a bigger structural challenge that the IT industry has. I think this whole thing of this visa and H1B is a bit of a red herring. The US needs H1B visas because they have a shortage of talent there. Even if they make it very expensive, it might change the profitability of these businesses for a while.
Okay. Mr. Bhasin, let's talk about, what's looking right now attractive to you in this market, especially keeping in focus, how we're going to see a rebound in earnings going ahead.
So like I mentioned, I think the economy is going to bounce back, and when the economy bounces back and we have higher growth rates, I think a lot of the cyclicals which got burnt very badly, you will see a revival of demand across a lot of the cyclical businesses, and all of them I think you will see initially, because of higher utilization, you will see more operating leverage, and then you will see growth opportunities come up, and you will see capex, and you will see that whole ecosystem play out. So I think the defensives will probably not do that well relatively, and the cyclicals are what's going to do well. But now I'm talking from a 5 and 10-year perspective rather than for the next 3-month perspective.
Right. Rahul, let's get your views on the way valuations are looking right now. The jury is out there. People are divided whether these are fair valuations with the potential earnings which lie ahead, or these are stretched valuations with the speed at which the markets have shot up. Which side of the argument are you?
Look, I think that markets have become more efficient around the world. So essentially, the valuations in India are reflecting some of the growth rates that I talked about. I think, but they are pricing in a cyclical recovery. I don't think that they are pricing in a structural step change in growth rate, which we expect. So, again, I don't think you will see a change, or my view would be different from consensus if one were to look at a 2-year view. But I think that we are probably far more bullish than most people if one were to take a 5-year and a 10-year view.
Rahul, that was all the chat about the listed space. But let's also talk about the startup space, which you actually look at much more granularly. The valuation in the startup space has come down. Various brokerages have written down the valuations of larger companies. Transactions are happening at much more shrunk valuations. How are you looking at this entire space and the way correction has occurred?
So I think that, see, if you look at how startups work around the world and new things work, you always go through a phase of a lot of excitement and a frenzy, and everybody jumps in. There is always over-investment. As a consequence, there is then the shakeout phase, then the consolidation, and the shakeout and consolidation, and then real businesses emerge from that and then have a growth trajectory for many, many years after that. And I think you will go through, you've had the party, now you'll have some of the hangover, but at the end of the tunnel, on the other side, you will get real businesses, and they will then start getting valued on cash flows and on like normal businesses do, not in terms of vision. And I think we're seeing the transformation from valuing something in terms of the vision as to what this can accomplish or do or transform, versus now this is a real business. This has sales, customers, cost of servicing those customers, cost of goods sold, taxes to be paid, and therefore there is a cash flow stream which you can NPV and then put a real value to it. I think that's the transformation phase that you're going through at the moment.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.